what a black swan is and why it will pop the market soon. It's the unknown unknowns that always get us. The best and most detailed explanation and examples of black swans is in the book Black Swan by Nassim Taleb. Nassim is a remarkable individual who's been hugely profitable on the markets for many years now, and it's a book definitely worth reading. But in a nutshell, a black swan event is something that happens completely out of the blue, unexpected and unprepared for. In the real world, it could be a freak natural disaster like the Japanese earthquake, tsunami, and nuclear power station explosions. Or a black swan event could happen on the markets, like a large fund manager accidentally hitting the wrong button on his terminal, sending the global stock markets into a deep flash crash. Or a drunk trader accidentally buying up millions of barrels of oil. Crazy examples, right? Well, the crazy thing is that those two last examples are a true story. They both happened. But the handy thing for us investors is that often in the markets, the most profit you'll ever make are from trades or investments that are indirect rather than direct. And that's because the whole world focuses on the direct effects of a black swan, but few pick up on the indirect consequences. What this means is that you don't need to glue yourself to the charts or news channels waiting patiently for years for a big black swan event to happen, because you can just react after it's happened. See what the dominoes will fall as a result of this, and then make your move. Here are a few examples of direct and indirect opportunities. 1. A massive hurricane is about to wipe out Florida. Direct opportunity: you could sell house protection equipment, bottles of water, or tickets to bunkers. Indirect opportunity: you could buy stocks in companies that will be greatly used during the fallout and rebuild of Florida, especially ones that are likely to get massive government contracts to rebuild or help the area. Water companies, building and construction companies, makeshift accommodation, logistics companies, etc. You could also think longer term and see that half of America's oranges come from Florida. So in a few months there's going to be an orange and orange juice supply squeeze, and the country will have to import oranges to cover the deficit. So you could go long on orange juice futures contracts. Or you could go in and buy up actual equity in small building companies, as they'll be flooded with orders once the dust has settled. 2. Something abhorrently horrendous could happen, like another terrorist attack involving airliners again. Direct opportunity: you could short the stocks of the airlines that were used in the attack, i.e. profit from a falling stock. Indirect opportunity: you could buy up stock of weapons companies like Lockheed Martin and BAE Systems, as these companies get huge contracts before the Western world go to war.